Well, I mean, look, we're talking about opening up about 30 trillion, okay, round numbers, 30 trillion with a T. And, trillion is just a number that it rolls off the tongue, but no one really understands it.
How big it is.
To really understand it, you and I would have to sit here on air for 31,710 years and spend $1 every second. That's 1 trillion. So 30 of those units are going to be opened up on, I believe, January 8th next year when they crown the king on the king's birthday. That's my little thing. On Elvis's birthday, they will crown BlackRock.
That's a good one.
Now, they're not going to put all their money in, but just 1% of 30 trillion is $300 billion. $300 billion of demand for spot Bitcoin will drive the price meaningfully higher.
Yeah, for sure.
Chief Investment Officer and hedge fund founder Mark Yusko believes that on January 8th, 2024, BlackRock's spot Bitcoin ETF is going to be approved, unleashing $300 billion onto Bitcoin. Yusko is expecting in the first few weeks, the ETFs will see $30 billion worth of inflows, which will put a huge amount of upwards pressure on price. Then, over time, we're going to see the Bitcoin ETFs attract 1% of the total $30 trillion market, meaning $300 billion will find a home in Bitcoin. For an asset that has only $200 billion of available supply, that would be explosive for the price. Make sure to stick around to the end of the video where Yusko makes a case for Millennials and Gen Z being major catalysts for the long-term price growth of Bitcoin. Also guys, if you want to stay most up to date on the crypto and Bitcoin world, make sure to subscribe to my daily 5-minute crypto newsletter. It gives the latest expert predictions, any breaking news, and top on-chain analysis all in a nutshell. Click the first link in the description to join 30,000 others in becoming a better crypto investor right now. Now here's Mark Yusko on why $300 billion is coming for Bitcoin.
Here's the crazy thing. We live in this permissioned world, and yet we all tolerate it, right? We put our money in the bank. It's now the bank's money, and we can use it if they give us permission. And yes, they give us permission most of the time, but sometimes they don't, right? Imagine waking up in, the island in Europe, back in 2013, 14, where they took 3/4 of your money, Cyprus, right? Because they had lent money to a bunch of Russian oligarchs and it got confiscated. So
Lebanon.
Your money's gone.
Yep.
Or how about La Jolla Savings Bank? You put your money in, thought it was safe, and it's gone. So one of the things about permissioned worlds is they like that control. And what they really like, Paul, is they extract $7 trillion every year globally from us in the form of account fees, accounting fees, audit fees, transaction fees. If I want to send you money, I have to have a bank account. You have to have a bank account. They charge me a wire fee. If I want to send you a Bitcoin, I punch a couple buttons and it's yours. So that frightens them to death because they're a monopoly on friction. So governments have a monopoly on violence. Banks have a monopoly on friction. And that monopoly is about to vanish.
Yeah.
And that terrifies them. And I think once we get the sense that, well, wait a minute, I don't have to live in a permissioned world. I tell a story all the time that, the first time I tried to transfer money from my Bank of America account to Coinbase to buy some assets, and we were early investors in Coinbase, and so I still use them. People say, not your keys, not your coins. I'm like, yeah, I know, but I use Coinbase because I like the business. And so, long story short, Bank of America said, yep, 14 days. Like, what do you mean 14 days? I said, well, did you read the fine print? Of course I didn't read the fine print, you morons. Now, I don't bank at Bank of America anymore because that's BS. Now, I know the current bank I'm with could do the same thing, but they haven't yet. And in that world, ultimately, billions of people will use digital assets. I say this all the time, and I'll use the prop. So my granddaughter's 1 year old. She's a Zoomer, a Gen A. She will never have one of them. She will never have a leather wallet. She will never use paper money. She will never know what paper money is. She'll be totally comfortable in the digital world. And that is a world that doesn't exist right this second. But in 20 years, when she's an adult, that's the way the world will work. And I think because of that, this cycle and the approval of the ETF and the liberation of all those assets that are permissioned and excluding owning things like GBTC or, MicroStrategy or BITO or whatever it is,
right,
suddenly are going to find their clients. Now, they're not going to put all their money in, but just 1% of 30 trillion is $300 billion. $300 billion of demand for spot Bitcoin will drive the price meaningfully higher.
Yeah, for sure.
If the ETF were to never happen, we're still halfway through crypto summer. The halving's still going to occur. The fair value of Bitcoin is going to double, right? Because if your block rewards go down, the price has to rise or else all your miners go out of business. That's what we've seen time and time again. All that's going to happen. Crypto fall starts next June. Crypto fall is the period following the halving. That's the parabolic move. And fair value today is in the low 50s. We're in the low 40s, so we're almost there. I've been saying all year that we were headed toward fair value right before the halving, and then the halving will occur. We'll have a rapid move to the new fair value. That will trigger FOMO. Lots of people will come in. We'll shoot right through fair value, probably into the mid 100s, maybe 150. And, then we'll see how it goes. That's without the ETF.
Yeah.
That's just the normal cycle. With the ETF, all bets are off because it is real demand for spot Bitcoin. And here's the thing, Bitcoin trades about $8 billion US dollar equivalent a day. Okay, but it's not 8 billion unique. A lot of that is just the same stuff traded over and over. Right. There's only about 25-ish% of the 800 billion of market cap, so that's 200 billion, that's available to trade. The rest is either lost, stolen, locked up, multi-sigged, hodlers, I'll never sell at any price, although there's a price. But call it 75% of it not interested in trading. So that leaves about 200 billion to trade. And if we get 10 basis points in that first week, that's 30 billion. That'll move the price. If we get the full 1% pretty quickly, which I actually think we will, that'll move the price a lot. So how high can we go this cycle? I don't know. Fair value, 100K by mid next year. Can we shoot to 150, 180? Easy. Max Kaiser is saying, it's gonna be 200, 220. Certainly not out of the realm of possibility. And will we have another crash? Sure, because people will get to a bullion. I think there's less leverage this time, Paul. I don't think, if you go back to the last cycle, fair value was 31, we got to 69. Okay, about 2 point something times fair value. I don't think we'll go to 2 point something this time. I think more like 1.5, 1.7, 1.8 seems more likely to me. But I don't know. That's just the math that I do, right? Our generation, us boomers, are going to leave our kids, give or take 39 trillion. Let's round it to $40 trillion with a T. Okay, not tomorrow, but over the next, call it 30 years. Because my wife and I are the last 2 years of the boom. I'm 63, she's 64. 1963, I'm 64. I'm 60, she's 59. So we don't plan on going anywhere for a while. But over the, next, call it 30 to 40 years, that $40 trillion is going to get left to the millennials. The boomers today have about 3% in digital assets. The millennials are closer to 20.
Interesting.
20% of 40 trillion is a lot. So, and that number's only going to accrete higher over time because people are going to wake up to this idea that fiat is a stealth tax and digital assets, particularly Bitcoin, are a wealth preservation mechanism.
So there's Mark Yusko's insightful perspective on the potential impact of BlackRock's spot Bitcoin ETF approval on January 8th. His prediction of $30 billion in initial inflows and a staggering $300 billion eventually finding its way into Bitcoin underscores the transformative power this could have on the cryptocurrency market. Yusko's case for millennials and Gen Z as pivotal forces in the long-term price growth of crypto is a reminder of the shifting dynamics in investment trends and generational wealth transfer. Before you go, if you're looking to stay on top of all things crypto and Bitcoin, remember to subscribe to my daily 5-minute crypto newsletter. It's a treasure trove of the latest expert predictions, breaking news, and essential on-chain analysis, all condensed into a quick, easily digestible format. Join a growing community of over 30,000 subscribers and elevate your crypto knowledge starting today. Anyway guys, hope today's video provided you with some value. I'll see you all in the next one, and as always, all the best.